All right, let's get right into it. Today, we're going to pull back the curtain on the hidden math behind a really common and, let's be honest, a very expensive purchase. We're about to see how a seemingly simple deal can slowly, quietly turn into a massive financial trap.
So, it all boils down to this one question. I mean, it sounds kind of impossible, doesn't it? How on earth can a single vehicle end up costing you more than double its original price? Well, that's exactly what we're going to break down piece by piece.
But before we even get into the how, let's just absorb the why this is so important. This is where it all ends up. A jaw-dropping net loss of $115,000. That number right there is the punchline. Now, we're going to figure out how we got here.
Okay, let's start the investigation. You can think of this as a kind of financial forensics. We're going to follow every single dollar right from the moment you get the keys to that final payment 7 long years later.
So our journey kicks off right where it's supposed to.
Day 1. You're at the dealership and everyone's focus is on that one big number, the sticker price.
For most of us, this feels like the end of the math problem. $55,000. You sign the paperwork, drive off the lot, and in your mind, that's what the truck cost. But in reality, that number isn't the finish line. It's just the starting gun.
And this right here is where the trap is actually set. It's not in that big, shiny number you see up front. Nope, it's in the smaller, relentless monthly costs that just quietly pile up year after year. That's what does the real damage.
We're going to be tracking 3 main culprits, 3 financial drains: the loan interest, the insurance on the vehicle, and, of course, the fuel to run it. Each one seems pretty manageable on its own, but when you put them together, they create a perfect storm. Just look at how fast these small expenses blow up. $250 a month for insurance doesn't sound like a fortune, but over 7 years, that's $21,000. And gas at $3.50 a month, that turns into almost 30 grand. You combine those, and you're at over $50,000. That's practically the price of another vehicle, spent on things that aren't even paying it off. Now, let's get to our third drain, loan interest. It's pretty simple, really. It's the fee you pay for the convenience of not having 55 grand sitting in your bank account. And over a long loan, that fee, well, it can be absolutely massive.
And in this case, it is. The total interest paid comes to $24,600. Now, this is money that just, poof, it vanishes into thin air. It doesn't pay down the truck, it doesn't cover insurance, it doesn't buy you gas. It's purely the cost of borrowing the money in the first place.
Okay, let's hit the fast forward button. We're zipping through those 7 years. The monthly payments are finally done. The truck has officially 100% yours. Now it's time to add everything up and see what the final shocking bill really is.
So let's walk through it. You start with the sticker price, 55 grand. Then you tack on $50,400 for insurance and gas. And on top of that, you add $24,600 in loan interest. And the grand total of cash that has actually left your bank account is $130,000. And this visual just says it all, doesn't it? It shows this huge chasm between what you think you're paying and what you actually spend. On the left, the price you agreed to. On the right, the money that really left your wallet. That gap is enormous, and it represents years and years of hidden costs. But we are not done yet, because paying all that money is only half of the trap. The part that makes this so brutal, so truly devastating, comes when you look at what you have left after all that spending. This is the final, sobering twist in the story. This is the key question you have to ask yourself. After 7 years of payments, after parting ways with a pile of money that could have been a down payment on a house, what do you really tangibly own? And here it is, the brutal, just heartbreaking math. You have paid out $130,000. In exchange for that, you now own a 7-year-old vehicle that, thanks to depreciation, is worth just $15,000. So let's be crystal clear about this. You have effectively transformed $130,000 in cash into a $15,000 asset. The difference? That 115 grand, it's just gone. It's vanished. That is the 7-year trap fully sprung. You know, seeing the numbers laid out exactly like this is a really powerful reminder of how these small, long-term costs can lead to just staggering losses. And it leaves us with one last really important question. If this can happen with something as common as a car loan, what other financial traps are out there, hiding in plain sight
all around us.